Rick Rule is surprised by how well the US economy has held up. The speed with which interest rates have gone up, which our economy has been able to handle with a relatively low amount of pain. But he is surprised by how little pain we went through because of the economy. We've been able to get through this hard time in part because there are literally trillions of dollars just waiting to be invested. Investors have a lot of money in the bank. The results of the interest rates influence, as a general rule, increases come after the fact. For instance, the halving of the interest rate on a 30-year mortgage has led to a decrease in the number of sales of single-family homes. However, wholesale costs haven't fallen since no one is willing to lower their offers. A pause of sorts has been seen in the processing of transactions. In addition, he is of the opinion that the effect of increased interest rates will be felt all throughout the economy. That the response of the economy, specifically the adverse response of the economy, will start to gather up speed. He would also caution investors to understand that rising interest rates are highly negative for the long bond market and can be awful for the equity markets as well. This is something that he would caution investors to understand. It is undesirable in the sense that the cost of capital for corporations rises at the same time as the value of distributions that have been capitalized. This results in a decrease in the competitiveness of dividends in comparison to other products designed for conserving money. In all honesty, he is astounded by the resiliency of the American economy. But he is going to continue to exercise extreme caution in the face of rising interest rates. He believes that there is a possibility that we can rally and get a bounce, merely as a direct result of the undeniable reality that there is a significant amount of cash sitting idle. His sense is that it will not last very long, whereas my suspicion is that the full impact of the rising interest rates has not yet been felt by us. A majority of different asset types will suffer when interest rates rise. However, this has been partially offset by the remarkable resiliency of the economy of the United States of America, the extraordinary endurance of learning, and the fact that ordinary investors and institutional investors alike have a large amount of cash sitting on the sidelines. He is of the opinion that they will keep increasing the interest rates for as long as they are able to. It is important to keep in mind that despite the fact that the nominal interest rate has climbed quite a little, real interest rates are still in negative territory. If you omit the cost of food and fuel from your calculations, you'll notice that inflation has been decreasing recently. One might reasonably assume that the Council of Economic Advisors does not travel by car or consume food. It is essential to keep in mind, however, that real interest rates are negative. If you take a look at the United States 10-year Treasury, for example, they will offer to pay you 4% in a currency that they admit will lose 7% of its purchasing power over the course of a 10-year period. That is to say, the real rate still results in a loss of 300 basis points each year for savers. Things will be different in the future if they are able to handle the issue, which he does not believe they will be able to accomplish without having a really truly major impact on the economy. And if we start to see a trailing effect of interest rates in equity markets as well as in general economic activity, he expects that the political pressure on the Fed to shift would be quite high. This is because stock markets and general economic activity are both influenced by interest rates. As a result of real interest rates that were either very low or negative from 1970 until the beginning of 1975, we saw a period of galloping runaway inflation. In 1975, the Federal Reserve Board decided to increase the interest rate, which caused the price of gold to plummet, while simultaneously bringing the economy to its knees. And in only a few short months, the Federal Reserve fell under pressure, which resulted in the opposite of what was desired, which was, of course, a surge in gold prices and inflation. His main concern is that the foundation of the American economy is too reliant on artificially low interest rates and too reliant on liquidity. However, it is necessary for him to state that he is impressed by the resiliency displayed by the economy of the United States, and more specifically, by earnings to this point. According to Rick Rule, the economy has been relatively stable for the past 4 decades. 40 years of actual interest rates getting lower and lower. The positive effects of demographics during the past 40 years. And he needs to declare that with the exception of the benefits that we will continue to enjoy as a result of improved technology and increased inclusion in the workforce, he believes that those benevolent times are behind us now. For a period of 40 years, peace was gradually spreading throughout the world. There was an increase in the number of persons participating in the labor market, and in particular, we experienced a 40-year trend of falling interest rates, both nominally and significantly. As a result of that, we are going to have to readjust our behavior to conform to a new standard. and the year 2022 may serve as a sneak peek at the forthcoming events. Rick Rule would also point out that the fall that we experienced was a prolonged downturn that was gradual and grinding throughout many markets, but not the kind of abrupt stop that we have been experiencing. As an illustration, in 2008, the fact that the S&P did not collapse by more in the face of a doubling of interest rates and a doubling in the yield of rival products is something that he believes actually is a testimonial to people's conviction in equities. Rick Rule is skeptical that this view is firmly grounded, but I believe that what we witness in 2022 is going to be something that we will need to get used to in the future. He is of the opinion that people will eventually be forced to become stock pickers. He is under the impression that you would not be successful in acquiring the market, simply because he is under the impression that there will be no demographic tailwinds in the market. He is of the opinion that there will be no positive effects brought by globalization. I don't believe that its incorporation into the labor force will result in a benefit that is sustained over time, because the number of women holding jobs is getting dangerously close to that of men. Rick Rule is not optimistic about the possibility that we will reap the benefits of falling nominal interest rates and falling real interest rates. He believes that there will be positive developments in the future. Rick Rule is still impressed by the rate of innovation in the United States and, frankly, all over the world. Rick Rule is of the opinion that you won't have to look very far to uncover businesses that can actually improve things. He is under the impression that you won't be able to get a foothold in the stock market in the United States as a whole. He does not believe that you will be able to benefit from significant economic tailwinds by purchasing any one of the thousands or hundreds of thousands of ETFs that are currently available. On the other hand, Rick Rule is of the opinion that an investor who keeps their cool and makes shrewd investments in firms rather than the market as a whole will continue to be extremely successful. Just as Buffett enjoyed exceptionally high levels of success during decades such as the 1950s, 1960s, 1970s, and 1980s, he is confident that there would be a good opportunity to earn a lot of money from this. Simply said, it is not going to be manufactured on the same scale as it has been during the past 40 years. According to Rick Rule, the US dollar is the most transparent and liquid market in the world. There are no restrictions on buying or selling with this currency. He is certain that the US government is deliberately destroying the value of the dollar through the use of US law and currency as a weapon. That is to say, we are doing everything in our power to wean China, India, and Saudi Arabia off the dollar. However, the dollar is such a powerful weapon that it will likely survive the government's attempts to destroy it. The irony therein is outstanding. My personal experience with very large Asian pension fund investors has taught me that they do not trust us and do not particularly like the value proposition around the US Treasury. But they also do not believe that they have any alternatives with regard to the depth, liquidity, and transparency of the market, which is to imply that they have more faith in us than they do in any of the other major powers or even in each other. Rick Rule thinks that the politicians in the United States don't know much about a free economy and don't care much about it. They know a lot about politics and power and care a lot about it. Trying to enforce US foreign policy goals often means lowering the rest of the world's trust in the US because it means trying to export US values and laws outside of US territory. If we want to fight China instead of trying to beat them in the economy, we try to hurt them by making it hard for them to get our currency. By itself, that makes the US less likely to look to China as an example of how to run the world economy. What thoughts do you have on the information that Rick Rule presented in this video? Your thoughts and opinions would be greatly appreciated. Please share your opinions with us by using the comment section down below.